Hello and welcome. In this explainer from GEPL Capital, we're going to tackle a topic that, let's be honest, can feel a bit complicated: mutual funds. But our goal today? To make it super simple and crystal clear for everyone. Let's just dive right in, shall we? Does the whole world of investing ever feel a little overwhelming? You know, like it's this exclusive club with its own secret language? If you're nodding along right now, trust me, you are not alone. It's a really common feeling, and today, we're going to change that. So, here's our plan for today. We'll start with that feeling of complexity and then show you how mutual funds can be the perfect solution. We'll look at the different types out there, talk about all the big benefits, and then figure out if they're the right fit for you. Sound good? Let's get started.
Okay, first up, the mutual fund solution. Let's break down how this one powerful idea can be a really simple answer to what feels like a complex problem.
So, what on earth is a mutual fund? Well, at its core, it's just a big pool of money. The fund takes money from lots of different investors, people just like you and me, and invests that huge combined amount into a whole mix of things, like different stocks and bonds. Simple as that.
And how it works is incredibly straightforward. 1. You and a bunch of other people put your money in. 2. All that money gets pooled together into one large fund. And 3, this is the best part, a professional fund manager takes over and invests all of it for you. You get all their expertise without having to be an expert yourself. All right, now that you know what a mutual fund is, let's figure out the right type for you. See, not all funds are created equal. They're built for different goals. Just think of it like a restaurant menu. You've got to choose the right dish for what you're in the mood for.
First on the menu, we've got equity funds. These guys invest mostly in the stock market. Their main goal? Long-term growth. So if you're looking to build wealth over a few years and you're okay with the ups and downs of the market, these funds could be exactly what you're looking for.
Now, on the other side of things, we have debt funds. These are all about stability. Instead of stocks, they invest in things like government or company bonds. They're not trying to grow super fast. They're designed to provide a steady foundation and maybe even some regular income. They're perfect for anyone who prefers a lower risk approach. So really, it all boils down to a pretty simple trade-off. Equity funds are for growth, but that comes with higher risk. Debt funds are for stability, which naturally means lower risk. Getting this basic difference is honestly the key to choosing the path that's right for you. But what if you're thinking, I don't want to choose just one. I want a bit of both. Well, that's exactly what a hybrid fund is for. It mixes both equity and debt together to give you a nice balanced approach. The best of both worlds, you could say. And of course, there are a couple of other popular types you should know about. We've got index funds, which just try to copy a market index, like the Nifty or Sensex. And then there are ELSS funds, which are a big deal here in India because they give you tax-saving benefits under Section 80C. Okay, we've covered the what and the which. Now let's get to the why. What are the big benefits? Why are millions of people all across India choosing to invest in mutual funds?
The advantages here are seriously powerful. First, there's diversification. It's a fancy word that just means your risk is spread out. So if one investment does poorly, it doesn't take your whole portfolio down with it. Then you've got professional management. Experts are doing the hard work for you. They're incredibly affordable. They offer liquidity so you can get your money when you need it, and they have amazing flexibility, with a fund for pretty much any goal you can think of.
And when we talk about affordability, this number says it all. 500 rupees. That's it. You can actually start a systematic investment plan or an SIP with just 500 rupees. It really proves you don't need a lot of money to start building your future. So, this brings us to our final and I think most important section. Is it right for you? Let's take everything we've talked about and see how it might fit into your life and your goals. So, who are mutual funds a great fit for? Well, they're fantastic for beginners who are just starting out. They're perfect for salaried individuals who want to build a disciplined saving habit through SIPs. And really, they're for anyone planning for those big long-term goals, like retirement, your child's education, or just building wealth over time. And if you're wondering when the right time to start is, there's this old proverb that just says it perfectly. The best time to plant a tree was 20 years ago. The second best time is now. The message is clear, right? The best moment to start planning for your financial future is today. And before we finish up, just one very important reminder. Mutual fund investments are subject to market risks. Please always read all the scheme-related documents carefully before you invest. It's the key to making smart, informed choices with your money. So, we'll leave you with one final thought. Now that you have this simplified understanding, the real question isn't if you should plan, but what you should plan for. So what's that first financial goal you're going to tackle?